Hello everyone, welcome to my channel. Today we're going to talk about another strategy in your options portfolio to earn regular weekly, monthly, bi-weekly income, and it's called cash secured put or CSP. This is a great way of earning regular income if you have cash in your account, which is equivalent of buying 100 shares for a particular stock or index, ETF, any commodity. So let's see what a cash secured put is. It's a great option strategy. So first let's understand what's a cash secured put and why people sell it. So cash secured put is primarily sold for three reasons. One is to earn regular weekly, bi-weekly, monthly income. You can sell these cash secured puts literally every week. You can also do it every day on indexes like SPY who have daily contracts, but primarily weekly, bi-weekly, monthly are the most popular ones, which can earn you great consistent uh, income. The other reason why people sell cash secured put is to own shares longer term in the account. So if you want to own these shares longer term, you use cash secured put to own these shares. And third reason is obviously to buy these shares at reduced price than the market price, because you not only buy at a rate that you define, you also get a premium for it, which lowers your average buy price further than the rest of the people who buy directly from the market. So great way of reducing your cost of ownership for owning the share. Now, when do you sell cash secured put? You sell cash secured put primarily when few conditions, technical conditions are met. One is when the RSI is elevated or the stock is oversold. You sell cash secured put when typically the stock has a red day, which means it has gone down significantly. And you can also sell cash secured put when the stock is hit hard due to any reasons, like it could be a market event, it could be a specific news about the company, it could be some management changes, it could be some reverse stock split and things like that. Now let's understand a little bit of a construct of this cash secured put, how it is constructed. So number one, you need to have cash in your account which is equivalent to owning 100 shares for that particular stock or ETF. Then you sell a cash secured put, and we will see that further down the video in terms of how the cash secured put is sold in a brokerage account. And then you close the cash secured put. There are three scenarios which are possible. You can let the cash secured put expire worthless. In that case, you keep the whole premium that you earned when you sold the cash secured put. You can close it early, so that so basically you buy back the cash secured put that you sold before the expiration date, and you pay the premium to buy it back. So you basically give up part of your gain that you earned through your premium. So it's partial profit when you close it early. Or you can roll it on. You can roll it on to the next expiration date if you think that your levels will be breached by the expiration date and you don't want the assignment. Then you basically roll it on for a future expiration date. So let's see how it works. So this red line is a strike price, and let's say the stock is in a declining mode. As I just said earlier, that you you sell a cash secured put when the stock is in a downtrend, or it is the RSI is very low. Now when you sell a cash secured put, you get the premium for selling it, and that premium is for you to keep unless you close it early. On the expiration date, as long as your stock price is above the strike price of your contract, you pocket whole premium amount, 100% of your premium. On the expiration date, if the stock price is lower on this part, lower than the strike price on the so lower than this red line. Let's say the stock is here at this level on the expiration date, which is lower than the strike price, then you will be obligated to buy 100 shares um, at a strike price that you entered in the contract. So these are the possible scenarios. Now the outcomes would be you keep the full premium if your option expires worthless. You can buy back the put and earn partial premium. That happens anytime before this expiration date. You can buy it back and pay some premium. So you basically keep part of the premium that you earned when you sold this cash secured put. Or you can buy shares at the expiration date, buy 100 shares or one contract. If your put is executed, which means the stock price becomes lower than the strike price. So these are the possible scenarios. Now let's jump into the actual brokerage account and see how the cash secured put is executed. Okay, so let's look at AMD for our cash secured put. And let's see, so since we are selling, it has to be sell put because we are selling a put, cash secured put. So these two should be highlighted in green. Today is green day for AMD because the stock is down. So remember what I said earlier, you sell a cash secured put on a red day. So let's see how premium look like for 7th of June, which is 3-day expiry. We are at 160. So let's see, 155. We got 0.22 delta, 1.08 premium. Seems good, but it can drop further. I think let's go 1 week, maybe 14th of June for AMD, like which is 10 days away. And then let's see the delta values. 0.24 seems good to me. 152.5, 150 is also good because we've got delta less than 0.2, which is safer range. So let's select 150 as a strike price. Delta is good, so we can select this. We get 135 premium for this. And if you look at how the numbers stack up, as long as AMD is above 150, we will be keeping 100% of our premium. And if it drops below 150, we will have to buy 100 shares with the cash that we have. That's where the name is cash secured. So we'll have to buy 100 shares, or we can choose to close it before the expiration date and earn part premium, or we can roll it on to a future date. All three scenarios, as you can see here. So we do nothing in this range. In this range, when it starts dropping, we either close early or we roll it on, or on the expiration day, again, we do nothing. We simply buy 100 shares at 150 and then use it for selling covered call using our peeling strategy that I talked about in one of my earlier videos. So with all this, we hit continue. Everything looks good. And then we review the order. And we submit the order. Right. So as you can see, AMD cash secured put is filled and it's done. So that is how you execute a cash secured put in AMD, where you earn consistent weekly or bi-weekly or monthly income by selling cash secured put. Um, if you want to see more such videos, please subscribe to my channel because I'll be coming up with more such strategies in the future. If you like this video, hit a like button and refer it to your friends. And also don't forget to subscribe to my channel for such content in the future. Thank you for watching.